Hey, what's up everybody? Welcome to the Average Joe Dividends YouTube channel. In this video, this is my Monday buy video. This is portfolio update number 171. And what I do every Monday morning is I deposit $100 into my Average Joe Dividends M1 Finance taxable account. And then I let M1 do the picking of where the money goes. What I mean by that is you can see here with the slices what the actuals are and the target. So anything that's underweighted is where the money is going to go. You can see the portfolio, the dividend portfolio portion is overweighted by 0.3%. We're underweighted over here and we're underweighted over here. So chances are it went into this slice, into the 12 more dividend slice. But let's go back though at the portfolio. And I've been investing into this portfolio since 2017. And you can see what the portfolio value is right now, just over 266,000. But we were at all-time highs here just back in February where it was over 280,000. You can see the slip right here. And then we had a little bit of a recovery into the 270s. We're back into the 260s again. And we can see this over the last year, still up over 5%. You can see with the dividends included, it's at 9.37% for the return. We'll look at the last month though, and that's where most of the bad news is at, and we're down 4.82%, but that's okay because this is a buying opportunity in my book. So what I do is I buy no matter what the market is doing, and that's called dollar cost averaging, and that's what I do into this portfolio. Each and every week, twice a week with 2 buys. So let's go ahead, we'll get into the activity log and we'll see what happened there. And there were 2 dividends that rolled in that are going to be dripped back into those positions. So the Waste Management dividend for $8.66 and Lockheed Martin for $5.52. Those are going to buy more fractional shares of those 2 companies. So we can see the 4 buys, and again, 2 of those are dividend drips. So the $100 was split into 2 different investments, and we'll see what those are here. But we'll go through the dividend drip first with Waste Management. The 866 that bought 0.03757 of a share of Waste Management, and then we'll go into the back into the 4 buys. And then so Oracle is where a portion of the $100 went into. 21 of the $100 went into Oracle, and that bought 0.16212 of a share of Oracle. And then the other portion went into Nvidia. So this is really more of a growth play because both Oracle and Nvidia pay a really low dividend, but there's growth though, especially with Nvidia. What they've done over the past couple of years, it's exponentially gone up in multiples, and I'll show you that how much I've gained with Nvidia in a little bit. And it bought nearly 3/4 of a share. It bought 0.74451 of a share of Nvidia, but this is not going to move the needle at all for dividend income, but it is going to move it for just stock appreciation, hopefully, if Nvidia does recover to where it was before. And then last up is Lockheed Martin. Again, another dividend drip, the 552, again, Waste Management and Lockheed. These are dividends that paid me over the weekend, and then Monday was the first opportunity for them to be put back into the portfolio. So it bought a tiny sliver because Lockheed Martin, their share price is over $447, and only bought 0.01232 of a share of Lockheed Martin. Again, this is not going to move the needle much for the dividend income at all. So we're going to go on over to my Google Docs spreadsheet. I'll leave a link below so you can see what's all in this portfolio, to see the 52 different positions that are divided within these 3 slices. So let's go over to the Google Docs spreadsheet, and on this spreadsheet it shows all the positions within this dividend portfolio. You can see it shows the company ticker symbol, the share price, and this is using a Google Finance function to pull that live. And here's the average that I've paid for each of these shares. And then here's the shares that I own. And then here's the current value if I were to sell those shares. Here's the cost basis that I've paid for those shares. And here's the gain or loss, including dividends. And here is that gain or loss in a percentage. Anything above 25% will be in green, like in the case of Apple. Here is the dividend per share. They are all quarterly pairs except for the 2 monthly pairs, which are Realty Income and BlackRock's BST. And then we can see here is the yield, a current yield, and here's the yield on my cost. And for most of them, the yield on my cost is higher because I've paid a lower share price, with the exception of Pepsi and HP, where those are in the red. So not too shabby though. The 52 positions, only 2 of them are in the red. You can see here's the yield percentage, yield on cost. Here's the pay date. Everything on the sheet is arranged by pay date from oldest to newest. So when PNC announces their next dividend, which will be like May 6th, I'll change that date and then reshuffle the deck, and it'll push PNC in with the May payers right around here. It'll be in between Verizon and Lowe's. And here's what the next dividend is going to be if I don't buy more fractional shares or shares before the ex-dividend date. So you can see that. And here's the actual dividends paid. And I'm only showing March because we're in March right now. And we'll take a look at the dividends that I've paid so far for the month of March. There's a whole bunch left too, even though we're on the last day of March. Technically, those March payers on the 31st would pay today, but M1 has a 1-day delay, so those have not shown up into my account. But the total of the dividends received so far are $280.82. And then we look down here, and these are what's going to pay me tomorrow morning. I'm going to wake up tomorrow morning and have right about $1,475 in my account. And what I'm going to do is I'm going to SCHD is going to drip into the portfolio, and again it's going to go back to the allocations and try to get up to, the actuals meet the target. So anything that's undervalued or needs to catch up, it'll put the money into underweighted, I should say. It'll put the money into those positions first. So it's going to hit with kind of a bomb about $1,400 to kind of rebalance the portfolio with SCHD and BST. The rest are going to go back in to the stock that paid it. And what we're going to do in a little bit though is we're going to update this sheet because we're going to see the dividends change for Waste Management and Lockheed because of those fractional shares. We might or might not see Nvidia go up by a penny because each full share is only a penny a share. This is a growth play, of course. So if you bought a full share of Nvidia at 105.56, you're going to get a 1 cent dividend income per quarter from it. But you can see though how the gain or loss, this is my top position as far as stock appreciation has been Nvidia. So this is a long-term play for growth, and they've been growing the dividend as well. Look at last May. They grew the dividend by 150%. So next 5, 10, 15 years, we'll see what Nvidia does with that dividend. If we have a lot of growth like this over 5, 10, 15 years, it's going to be paying a lot more than this going forward. So, but this may not even go up at all, but we will see Oracle go up with it was like $22 going into there. This will go up by a few cents, and Oracle pays a higher dividend at 1.45%, but Nvidia is 0.04%, so very low. And we're going to see the cash flow, the monthly, quarterly, annual go up, but very, very modestly, really a few cents, because most of the money went into Nvidia, which pays hardly any dividend at all. But tomorrow we're going to see that average dividend really jump with the payments of these dividends getting applied into the portfolio. So we're going to grab some data from M1. We go to the holdings tab, and then I grab everything starting from the name column. We'll go down and then copy this over. And what's grabbing is I'm grabbing the number of shares, the average share price I've paid, the cost basis, and those three right there. Those three. It is what it's going to grab. We're going to paste it on over to the M1 data tab, and it's going to automatically update the sheet with the positions where we bought more fractional shares in. So it pays special values only into the A column, and it's aligning the shares, cost basis, and average of each of those, and it's doing a VLOOKUP to pull up those values, searching by the ticker. You can see SCHD, BST, and that's all it's really doing. And I'll show you the functions in there to pull the average. See the VLOOKUP right there in the M1 data tab. Same with the shares and then the cost basis. So we'll scroll over, we'll see some of these change very modestly. And like I predicted, NVIDIA, since we bought right around 3/4 of a share, it wasn't even a full penny to change it. It's still at 43 cents. But we can see Oracle, the next dividend is going to move from 7.45 to 7.53. And then we'll go to the cash flow average, and we can see it went up very, very modestly, just a few cents, from $1,030.71 to $1,030.77. And then quarterly went from $3,092.30 or 14 to $3,092.30. And then the annual went from $12,368.58 to $12,369.22. We're going to grab the monthly cash flow average, the $1,030.77. We're going to go put this over here in the monthly average dividend tracking tab. We'll scroll all the way to the bottom, which we're already there. So we'll put in 1030.77 once we get that over there, and the numlock is on. There we go, 1030.77. Oops, apologize. There we go, 1030.77. And again, it's just going to move it by 6 cents. And this was because of a $100 deposit. Of course, I could have redirected money to go elsewhere and had a much larger change to the monthly income. Say if I put $100 into BST or say Verizon, it would have been much more significant than this. But this is more of a growth play, and it was just rebalancing, because every Monday what I do is I let M1 do the picking based on what is underweighted. So tomorrow we're going to see the event of the SCHD, the BST, Pepsi, FNF, Digital Realty, Broadcom, Union Pacific, Travelers. All those dividend drips are going to hit at once. It's going to be a big one. It's going to change it by several dollars at least, being put back into the portfolio. So I may or may not do a video just on that to show all those drips, because that's going to really boost the dividend income and recover some of what was lost with SCHD with their dividend decrease from Q4 2024 to Q1 2025. So we've covered that. We'll close this out. We'll go to my total net worth statements, and this goes over the other 85% of my total net worth. This portfolio here, the dividend portfolio, this is about 15% of my total net worth. We'll go to the rest of it, which I have at Vanguard. I have an IRA, Roth IRA, taxable brokerage account, and the total value right there. Of course, it's gone down significantly with the market going down because of the tariffs and other things. And right now it's right around 447K. And then here's my work 401K, right about 97K. And then here is my IRA of prior employment before my current employer, and that's right about 667K. And then here's the dividend portfolio right here on this line. Here's a 1-year emergency fund over at Synchrony this is the 1-year emergency fund over at M1 getting 4%. And then here's my 6-month emergency fund over at Synchrony getting 4% interest. And then here is about 2 months of expenses over at Capital One getting 3.7% interest. Now a small checking account over at US Bank where I'm trying to complete some bonuses. One for a checking account where I have direct deposits, and there's different tiers and you get bonuses. Also a credit card as well, which I just paid the balance on it. If I spend $2,000, I think in 90 days, they give you a $250 bonus. So getting close to that, over $1,000. I think I'm up to $1,100-$1,200 on that. So getting close to that. Then here's the value of my home right here. And then here's my liabilities. I have an FMBO credit card where I just need to pay this off by April 9th. So I'm going to probably pay this off early this week. So I do not incur any interest charges on this. And of course, I have plenty in my checking account to just move over and just pay that off. And then here is the mortgage balance on the home that I own right here. And then subtracting out liabilities, here's my total net worth, right about 1.7 million, and it was over 1.8 not too long ago with the recent drops. But hey, that's, it's to be expected when you can see my breakdown of my net worth is at 86% in the stock market. It is what it is. This tariff business that's going on, it's not going to be forever. It's going to be temporary, and you're going to be glad that you invested into it. And it could get worse. It could keep on going down. We could see another 5, 10, 15, 20%, who knows, as far as cuts in the stock market. But history has shown that if you keep investing into what you're investing into, like a total stock market index, things like that, you could even look at my dividend portfolio as an index of sorts too, because it's well diversified. Even though the top holding is SCHD and $100,000 of the portfolio, and then BST another 60,000 plus. But you can see the individual positions starting with AbbVie, and I'm all over the place with a lot of good investments in here. Just household names, things that are just blue chip kind of stocks that really I don't think they're going anywhere in 10, 20 years, even more on a lot of these. So to me, I'm a long-term buy and hold investor, and I think I'm pretty comfortable with what I'm invested in for the long term. And you can see here's the split from pre-tax to after-tax. I think a lot of people get caught in the middle class trap where all of their wealth is in a 401k of their home, and that doesn't really help you. Like if something happens, like a job loss, it's hard to tap into a 401k, and it's a huge mistake to tap into that 401k for an emergency. And also, in your home, you really can't sell, bits and pieces of your home. You could get a home equity loan, but a lot of times the people I see who have HELOCs or home equity line of credits, things like that, or second mortgage, those are people who are not in a good financial position at all. So I think it's good to have that after-tax freedom with good emergency funds here in cash, as well as a taxable brokerage account, because I can sell things out of here if I want to at no penalty. Of course, I'll have some tax obligations at the end of the year, but that's okay because I'll be paying taxes on profits. So, but when you take things out of your own, 401k, you're going to be paying a penalty on that, and who knows, you could be selling it at a loss. So, but that's all I had to show you guys for this video. We'll go to the buys real quick again, just kind of review them. And Waste Management, Lockheed Martin, those were dividend drips. So everything went into Oracle, with the majority going into NVIDIA. If you got value from the video, please click the like button. Also subscribe so you do not miss future videos. I'm going to have a bunch of videos coming out. My next videos are going to be my budget video. I'll go over all the expenses and income and the gap that I had for the month of March. And then I'm going to show you the proof of the SCHD dividends I received from both my taxable account and my IRA as well, and quite sizable for both of those. I can't wait till I start drawing those dividends instead of dripping them or having them with an IRA where I really can't touch that money. So that's all I had to show you guys. Thanks again for sticking to the end, and I hope everyone has a great week. Thank you. Take care.